Hello and welcome. It is the completion of the 12th day of August 2019. My name is Derek. This is the Money Charts channel. Like always, all bets, trades of the like, within each his own risk and their own reward. Not much to go over on Bitcoin. Another one of those days where I'm like, yeah, I'm not going to do a video. At least not yet. At least get motivated to do it, meaning markets do something for me to talk about or let the time factor, I guess, which is what happened today. Price action today, just really sticking in within this 18 average of highs. Very low volatile day, as it had this down move a couple days ago from this high to the 18, and it's just hanging in there right now. And as I've been stating, until it can break out above resistance or support amongst the sideways range, and it's got a decent ways to go to either one now. And then it's in this neutral, you can call it a bull flag, sideways rectangular box, whatever you want to call it. But to me, it's just neutrality within what has been a very good run so far. Or it is a sideways move on leg number three. And there was sideways move number one on leg number one in here. Sideways move number two on the second leg. And of course, this being the third. And yeah, not much more else to go over this, and might as well just really head on to the precious metals, because price action is firmly within the 18 band right now, and it pretty much has been since it re-entered it back here on the August 11th timestamp amongst 5 in the morning, or yesterday morning amongst the 3 hour chart. So yeah, not much else to go over. So let's move it on to gold, which on the daily chart it's getting very, very close to that 1522, and it looks as if it's a gimme. No, I really shouldn't say that, but I say it should look like a gimme. Not only should it hit, but it should really hit today, tomorrow kind of deal, relatively soon. The session came in with an outside day over the two previous, as the August 8th and 9th session, or that of Thursday and Friday. The highs, well, this is highs gold hasn't seen in like a long time. So it's new highs. And these lows were lows from this breakout or time. So it came back to, it got by this low, albeit barely. We take a look at this amongst the single hour term time frame. Well, this is the low in which it took out. So whether I call this a failed breakdown or not, yes and no. Breaking down below this support, yes, but technically this low and this low, albeit it appears below, is kind of a match. Although, there was one, two, three lower lows, with each one barely being lower than the previous. With that being said, from that low and from that selling test, the green candle came in at 4 o'clock in the morning today, and the price action has just held all day, as we came up and we resisted right back to this level here. And now, throughout the rest of the day, ever since this 1400 timestamp and this volatile 1500 period where it came back down to where it came from here in the 18 highs, it has just been holding in there amongst this point. So within that action today, it does seem as if we are going through what looks like a big successful correctionary test. It may come and make a higher low to this, maybe as further correction, maybe come down to 1504 or something like that. I will all see in time, but it does seem to me as if this is poised to have a good breakout as well. That's what it's been doing here, as we can see on the daily chart, from these end of the May lows. Price action going from 12 and 3/4, now breaking out past 15. Price action, it's pretty much, it pierced below this line, but more times than not, it ends up being piercing extra than piercing less. Right now, it probably will. Time, of course, is what will determine such. And breaking out past this level of resistance on the weekly chart, which is holding and staying above it. At least not as of now, any coming back to where it came from. And this monthly level of resistance, of course, occurring after the break of this multiple hit area. If we don't find any resistance in this area, I wouldn't be surprised if we have a fast move to the next one to about 1675. And this level was major level of resistance between 1321 up and even to its pierce extra at about 13 and 2/3. Well, that's now going to be a major level of support if it's going to go there. If it does go quickly and moves up to the 1670 or higher level, then I won't be looking for support anymore at 13 and change. I'll be looking for the 1500 barrier. When we take a look at this against the Canadian fiat debt note, It's over $2,000 an ounce for the first time ever since, I guess, like, maybe not. First time ever was August the 7th. But within its session today, the same sort of similar deal, going down by this low and just holding this area very well. And the silver today also having relatively a sort of similar kind of look. And in viewing its single hour, here is this move earlier at 2 o'clock in the morning. This is a 4 o'clock move in here that got up to the 18 highs. It congested at that level until 11 o'clock. So it's just going to, it's it rhymes with gold. Obviously, one overperforming one over the other here and there. Gold having its run this year. But amongst it, just like gold, having a nice little setup in here, and it's not showing amazing levels near the all-time highs, but it has been showing moves since the May lows in here from $14 and a third or so, so up about two and a half almost, not quite. On the triple day time frame, this is where it starts to get a little interesting because, okay, we've gotten past this level of resistance. It's had small amount of support at it in these two periods in here, which basically left off support, as I like to call it, which to me means after recently breaking it, you go back to it and then you lift off to a new high after it. And into this major consolidation congestion area in here. And as it goes to the weekly, monthly, it really isn't a long sideways consolidation between this 14.5 and 21 number. It reached down towards that point in the halfway part of 2013. So it's been 6 years of this sideways rectangular box, again, however you want to call it. And again, until it breaks one of those key levels of resistance. But as it goes with gold and silver, if gold has spectacular moves, getting past its 1500 up to its next level, well, silver's going to keep making its way up. But it's got a decent ways to go to reach this previous high from 2016. Something gold's already taken out its 2016 highs, as that takes almost 4 fiat dollars to get to that line. And 340 would be 20%. So we're looking at about 18% or so of a move just to get to that level. And then on the monthly chart, if we have a high in at 48, well, if I multiply that 17 by 3, that's 51. So we need a 3x move, and that's what it's down, not only from this high, but of course from the 1980. And I never planned on doing it, but I did put a spreadsheet for this video, but I did quickly make my spreadsheet just to update it to show the cup and handle from 1980. And there would be a quick look at it going back to 1968. So there's the $50 high coming back down to this level in here, this congestion area. And then a retest of this level. And so far, it is holding and staying above this key area that you'd want it to stay above. As it would look something like, well, let me just draw a box as I got this in the paint program. But this was the general area of resistance in here. Actually, that's not it. Although the upper part is. It leads into like here. And even that's because I want to go to the actual high from here. And then I want to take. So this area was the resistance from 1983 or so. And this was the resistance from the 1995s, 2000. And we had point A low, which was 1972, point B high, 1980. Point C low, which in here, this came, for this move here. Let me just draw a line right here. We can see, I would have liked to see it hold somewhere in this area when it was going down to here. So the point below, which was like 1993, it went a little, I was going to say it went a lot lower than what I was hoping for it to go to, but I wasn't hoping back then for it really to do anything at all because I didn't even realize silver had any type of market like this back then. And I should have back then when we were talking like 1996, 98, when I was now well into my 20s or into my third decade. But that's because of, even though I was taking economics and accounting classes in school, they still didn't teach me much about a gold and silver, if anything at all, about how a gold and silver market works in school. And of course, I just didn't have any friends back then that traded markets or anything either. So it just pretty much stayed oblivious to financial markets throughout my 20s. So yes, so it held, went down a lot longer and a lot further than you would expect it to do so. But that would be point whatever, and I think I said point C for the lows in here. So now we got the point D high, and after having a move from here to here, you want to see it make that higher low from here to here, of course, which it did, lower than what I want. And now from this higher low point, you need to see it make a higher point from here. So far, it has within this level, meaning of the point I need to see it hold, it has held that upper end of it so far. It still has, again, a long ways to go to get out of this in that cup and handle formation as it would play out. It's really just a matter of a cup like this, a U-shaped formation, and then the second one to be having a significant higher low than the next. That's really all a cup and handle formation is. And now any move that gets up to this point, well, that is probably, I would have to think, the granddaddy of the all the cup and handles in the history of financial markets. That's what I would be thinking. And I think the results of breaking that level of the neckline resistance, which is 50, I think would just be phenomenal. So then now let's move it on to the gold to silver ratio just to see what's been going on. So since 8 consecutive days down, gold having its move and just consolidating within this low and this high as it plays out. Will we have continuation to the upside? I suppose if it breaks this level of resistance, then obviously it's been in a more longer term bull run higher. It's gotten over 100 before, back in during the time of silver's Great Depressionary days, as shown. Well, I've got the chart right here, but somewhere around here, I think the ratio did get to about uh, small hair above 100. I'd be surprised long term if it's able to hold and stay above it. But on a bullish level for gold, I think if it's now going to make a move and try to get above this, there's been a lot of resistance here, especially if I count the moves before that got there. That'll hold and stay above 70 would be very, very important. But I not only think it's in the future it's not going to hold that, that's not only going to at least test this previous low here in 32, but even break the even previous low, which would be equivalent to in this area the high when it was about we'll say a little over a dozen. I think I calculated 12 to 1, 15 to 1 area. And just a quick little note to finish it off: the S&P 500. I'm not really trading it at all, but just as I can see it, and I'm not trading it. I'm not. Not only am I not really, but I'm literally not trading it at all. And within this level of resistance, we can see that it came up to the 18 average after establishing this low, and we're seeing it that it's looking to break down below it. So how is it? How often has it done it before? Where you see it was rising, goes down, establishes support, comes to the newly declining 18 and leaving it. Well, it happened here on May the 23rd. Any other time when doing it? Here we can see leaving it on October 22nd, 23rd here. Just a small leg after that. I guess to a degree, if you ought to look at it and you think, okay, well, here's a spot where it was even on this, it's gapped open down here. So you could say on the open on July the 2nd last year that it was looking to do it, but obviously not much further after that. Here's a spot, I'm looking for the declining, so I guess you could count this one here on April the 2nd where it's starting to decline, but didn't have much of a leg lower. And don't know why I'm showing more of this. I'm just really, I should just end the video. especially when they have these gaps that look like this. To me, as I like to do it, it's almost like a pet peeve of mine, it's just to me, it's dumb how like criminal in a sense. And that's not fair. That's a better word. Not fair. Not right. Where markets can open and close like this, to me, the open should pretty much always be where the close is. Because the price in one trade should never be able to reflect anything large to such a degree, especially on markets that trade with nice volume and volatility. And it doesn't take much for that to even be the case. So, and again, this is like the S&P, like one of the biggest markets in the world, and this is what the daily chart looks like. Now updated just to this point again of today, whereas something like Bitcoin, going back to it, in every single one of these candles, the open and the close is pretty much the exact same number. So here, like on June the 26th, the market closed at 12,920, and then it opened at 12,927, or $7 higher, which is like nothing on that. That's how it should be. 15-minute time frame, you can see maybe some of the difference on the gaps in here because of the shorter term and less volatile market. Like in here, but you still got pretty good paint and look towards it as far as how that goes. I think I do not like how markets have this whole it closes and then it opens and then while it's closed they're able to do stuff. That to me is just not right. But in the crypto space, they don't close the market. It's a 24/7, 365 ordeal. And that's probably the way that it should be. For it would take centralization to have it go any other. Thank you for tuning in and have yourself a great day. Bye bye.